All right, good morning, trade pros. Welcome to our morning market update for this beautiful Wednesday, February the 19th of 2020. This is George Papazov from Trade Pro Academy. I hope you're having a wonderful morning. And let's do this morning market update. Let's start out with a little morning market fun fact because we ain't done that in a while. All right, this isn't really a market fun fact. It's more so a morning fun fact. On this day in 1878, Thomas Edison received the patent for his tinfoil talking phonograph. And that eventually became the modern record player, making it the first device to make sound recording practical. All right, so we got to celebrate that. Thank you, TE, Thomas Edison, for the invention. Pretty cool. We can't forget these kind of things, so I wanted to mention it. In market news, it's things related to trading more so. Just want to check one thing here this morning. Sorry, I got off my flow a bit. The Federal Reserve today in the afternoon is going to release their meeting minutes from the January 28th to 29th policy meeting, all right, which could help explain what the central bank is thinking about potential economic risks due to the coronavirus. All right, there's going to be a lot of discussion as well and insight into the balance sheet policy. Jerome Powell having indicated that at some point in the second quarter, they're going to stop purchasing treasury bills and stop providing overnight repo or overnight lending facilities to banks. The question is, is that still on pace? Are other Federal Reserve voting members, the FOMCs, the Federal Open Market Committee, are other voters also on board with this? What is their opinion? What is their outlook? All right, and we have also 4 Fed speakers, including voters, Robert Kaplan, Loretta Messer, and Neil Kashkari on the wire today. So we have a pretty busy Fed day. That's happening at 2 p.m. Eastern. There is no press conference. There is no decision being released. It's just the meeting minutes. It's a discussion point around the last meeting. So it is a little bit backward looking, but it's a piece of new information from a past decision already made. So it's got somewhat of relevance. It could cause volatility if there is changes to the statement, but only if there's major changes and if there's any notes or discussion points that really catch the market off guard. More likely than not, though, these events are non-events. All right, so new information, you say really neat, but it doesn't really help you with any trade opportunities. Another cool thing this morning is there's news that Warren Buffett rather has jumped in finally on the ETF train. And given that he's got $120 billion in cash in Berkshire Hathaway, it's interesting that Berkshire dipped their toes into exchange traded funds in Q4. And it's probably not Warren Buffett's decision. It's probably his managers, all right, Todd Combs and Ted Weschler. But at the end of the day, it's interesting to see a company that seeks value and buys things they understand and looks for companies to purchase, to acquire through mergers and acquisitions, finally putting some money to play into ETFs or passive funds. I think that's pretty interesting. Now, it's only a drop in the bucket. The combined total of their portfolio is $25 million, and it is a retirement part of their arm. It's part of the pension plan. So the $25 million is split between the S&P 500 ETF, which is SPY, the SPY, and Vanguard 500 S&P, which is VOO. All right, so Warren Buffett is dipping his toes, or his company is dipping his toes in passive investments. I find that really interesting. All right, other than that, stock markets overnight getting close to the overnight highs. We're about 1.75 points away from the overnight high. All-time highs prior around these 93s, and so we're getting close to the opening. We look like at this point the open could be very close to the overnight high and continuation to the upside. The coronavirus updates aren't as panicky, so I think the market's ready to release some upside liquidity and head on to new all-time highs. It is a bull market. You can't fight the bull. One interesting thing, though, in this stock market is that as these equities hit new all-time highs, or as they're tracking to hit new all-time highs, they haven't yet, the gold market hit 1614 overnight. All right, so it's interesting to see gold. Hang on, I think I have to disconnect my phone from the headset. All right, there we go. It's interesting to see gold hit highs because it's an asset that should be sold off as we get more risk appetite, which is equities getting in. All right, so it's interesting to see both of them go up at the same time. I think that's a correlation worth investigating and keeping a very close eye on. But other than that, overnight, not much news. Coronavirus situation hasn't gotten drastically worse. It hasn't gotten much better either, though. All the quarantine passengers off the ship in Tokyo are being released today. The quarantine's over, and I think we're gonna have to give it a couple more days to see how this situation unfolds. But for now, the bull case is it's the right side. The bull side is the right side. You got to be buying dips. There's opportunities. No matter how much you think this elevated market is or how high this market is, it can continue to go higher. As long as there's people saying it can't go any higher, there is more potential for it to go higher because those people haven't bought yet. When everybody's saying, "Oh my gosh, I'm in, let's go," that's when you got to be worried. But as long as you're reading headlines like market's overvalued, it's too late to get in, longest bull market on record, that means that people are skeptical about it. It's when everyone jumps in and when everyone's already bought, that's when you want to get out, because who else is going to push the price up? If everyone who wants to buy has already bought, there's nothing but sellers now. Very important dynamic in this market. All right, I think that's where we're at. So look to the upside. We're just about to retest the 82 overnight high and maybe even punch through it. Some good inventory at 85 to the upside. So equities, I think, will have a bit of a morning pullback, but then a follow through and continuation to the upside. We could even be out for all-time highs today. It wouldn't surprise me. It's 9 points away. All right. In Asia, Japan's up 1%. Hong Kong's up half a percentage point. China's down 0.3. India's up 1.1. In Europe at midday, London's up 0.8. Paris is up 0.6%. Frankfurt's up 0.4%. All right. Crude oil is up 1.4%. It went up to as high as 53.01. Now opened at 52.81 and seeing a little bit of a pullback, which is natural, but really big upside on crude from yesterday's open. We're up about $1.77 from the open of yesterday to where we are today. All right, gold price is up 0.7%, over 1,600 again. Bitcoin's up 4.3%, back above 10,000. So there's a little bit of appetite in the crypto market also, but hovering around 10,000. I think this is a good thing for crypto traders, not for crypto traders, but for crypto investors. There's two camps here. The ones that support the idea of the technology, the centralized, united payment system, and then there's the ones that are just trying to make money off of it. And I think for traders, it's not good news because we're drifting sideways over the longer term. But if this thing's going to become a global currency, like the agenda or the plan is, it's got to have stability. You can't be moving up 3,000, every week. And that kind of volatility or suppression of volatility is a good thing. I like to see that. Hang around 10,000 on Bitcoin. Today's economic calendar, 8:30, we had housing starts. The housing starts number was 1.567 million, higher than the 1.425 expected, and a little bit under the previous number. So that's a pretty bullish print. It beat expectations, but below the prior. So it's just a slight bull in terms of equity market sentiment. Building permits, 1.55 million this morning at 8:30 versus an expectation of 1.45. All right, and we surpassed the high end of the range by quite a bit. The previous number was 1.42 million. All right, so it's really good. By the way, on housing starts, we had a back month revision too, which is also positive. So these two this morning releases are fairly positive. Another print that came out this morning was the PPI, the Producer Price Index. It's a look at inflationary measures, and the PPI came out at 0.5%. Actual, the expectation was 0.1. The previous number was 0.1, and the high end of the range was expected at 0.3. So we're way above the previous, way above the expected, way above the high end of the range. All right, and this is a super interesting thing because inflation's ticking up. And if we have inflationary pressure being confirmed by the CPI and the other readings in the economic indicators, if inflation's heating up, the Federal Reserve will have to start to get hawkish. And we remember what happened last time the Federal Reserve got hawkish. Remember, we started to sell off the balance sheet, decrease the size, hike interest rates, and then December of 2018 happened, or December 2017 happened. Markets crashed. And so it's an interesting place to be. I think this inflation creeping up means at some point the Fed may have to take reverse course action, or at least not spike the punch bowl as much. All right, put a little bit less alcohol in to start, maybe even remove the punch bowl at some point. That's what we're looking at. There's a lot of pressure for the Trump administration to keep cutting rates, though, and keep the monetary policy accommodative. But this inflationary print is very interesting. Watch for that. 8:30 this morning, Fed's Messer speaking. 10 a.m. e-commerce retail sales and quarterly services report, nothing major. 11:45, Fed's Kashkari's on the wire. 1:30, Fed's Kaplan speaking. 2 p.m. FOMC meeting minutes. So this morning, I think we get a bit of a slower moving market. All right. a little bit of a pullback, then slow grind to the upside, and then at 2 p.m., really anytime after 1, as we get the Fed speakers coming out and the FOMC meeting minutes, you could get a rush of volatility in there. I think big institutional traders at this point are waiting for the FOMC meeting minutes, and I think that might take some of the volatility in the front of the day and push it towards the latter half. So, I mean, something to consider. All right. Today, I'm going to start out bullish. I'm going to look for a pullback to get long into, and I'm going to keep size a little bit smaller and add to it as volatility comes out. If there isn't much volatility, I'm not going to be out there swinging big lots today. Okay. Let's see if there's any questions. Even the manufacturing lays from China, parts suppliers, stores are manufactured China closed for a few weeks now. Yes, Lee, it's the thing about China is nobody knows how bad the damage is. I know that there's videos circulating out there, but I think that at the moment, it's just a concern once we look at some confirmation like GDP data, manufacturing data, all right? And I think China's masking a lot of this information. They're meddling with the numbers to make it seem not as bad, right? But I think this will trickle through eventually into the economic forecast. It might cause some pressure downside, but it's not going to stop you from getting long today. Do you know what I'm saying? That's what tends to happen, is that we carry our fears with us, and it prevents us from taking advantage of opportunity. And when it does happen, we'll know, because it will be happening, and then we'll take the opposite side and start short selling. Believe me, I make more money in a down market than any other condition type. But, it's all about the timing. And also, if it continues to go up, it could go up a lot more before it does what we think it should do. So be careful. All right. There's bias, and then there's money. And oftentimes your bias doesn't lead to money. Okay. Just a little pointer. I hope you're not taking that the wrong way. That's just my perspective. Could be dead wrong. We dropped 600 points from here as of right now. And then you're going to look at this message and be like, but that's not the likely thing to happen. All right, that's it. I'm going to hand it over to Boxy because I went a little bit overtime today. Here's my perspective, Lee. At the end of the day, you got to remember the market is full of people who think they're right, and they have opposing views. So it's an interesting beast, this profession that we've chosen to do, but I love it. Wouldn't change it for the world. Boxy, I'm going to hand it over to you. Talk about oil. YouTube, I love you guys so much. You have a great day. Be good out there. Manage your risk, trade pro. And I'll catch it in tomorrow's morning market update. Peace out. Take care. And goodbye. Thanks, GM. Thank you, Lee. Thank you, AJSA, Craig, Will, everyone on YouTube. Thanks for participating. Take care. Goodbye.